How's it going, everybody? It's Stas here. So the markets had one heck of a day today. The S&P 500 went up 1%. The Dow ended up going up 0.7%. NASDAQ 100 up 1.1%. And the Russell went up about 0.5%. So today we're going to break down some charts, my thoughts on the markets, stocks I'm looking at right now. So sit back, relax, take a sip of your good old Powerade. Go down below, get your $50 from M1 Finance. All you have to do is use my link, deposit $100, and we each get $50 to invest with. It's that simple. And you guys could check out my Patreon if you want. All my moves in real time and a bunch of other exclusive perks. That is also linked right down below. And with that being said, let's get right into the video. And as you guys can see today, like I said, we had one heck of a day, and the S&P 500 hit another all-time high. SPY, which tracks the S&P 500, it's an ETF, it went up over 1%, and it hit $440 per share. The exact all-time high was $440.30. And what else can I say? I mean, this thing recovered like crazy. I mean, you guys remember a couple days ago, we saw that sell-off, which literally only lasted about 2-3 days. And now we recovered all of those losses. We had the V-shaped recovery. We broke out of the 438 previous all-time high resistance. And at this point in time, and I think I mentioned this in the previous video, I believe we could end up going 445 even on this breakout, and this could very well be a buy the breakout opportunity. And is that for sure going to happen? 445, 450? No, I mean, nothing's definite. Nothing is for sure going to happen. I mean, nobody knows what will happen, but we've seen this happen many times where we've struggled at a point of resistance for whether it be a couple weeks, couple days, couple of months, and then all of a sudden we plow right through that level and we see a bunch of green days in a row. And I feel like that could very well happen based on what I'm personally seeing here on the SPY chart. So yeah, let's see what happens. I mean, we could also see some consolidation at about 440, 438, which again was that previous all-time high, which was resistance. Now it's support. So we could see some consolidation before ripping up higher, but overall, by the looks of it, the bulls are clearly in charge and we're breaking out and it's looking great. And I'm sure if you guys have a long-term portfolio out there, you own any individual stocks, you probably did well today and you've probably been doing well the past couple of days. So kudos to everybody out there. It's been one heck of a week in the markets. And when it comes down to QQQ, which tracks the NASDAQ 100, you guys can see this also hit an all-time high. We went up to $368.49, up about 1.2%. And just like SPY, this also clearly broke out of a resistance point, 365, which was a struggling point back in the middle of July, which was pretty much just a week ago. I'm saying back in the middle of July like it was a year ago. So literally a week ago, 10 days ago, we were struggling here. Now we clearly broke out of there, and this could also be a buy the breakout opportunity. Who knows? Maybe QQQ goes to 370, 375. That is definitely in the cards. But remember, guys, with all of these, the more extended we get, and we're already overbought. We're at 72 on the RSI here on QQQ. When it comes to SPY, let's see where the RSI is at. We're at about 68. So the more extended we get, which again, I feel like this could be a buy the breakout opportunity, so we probably could go higher. But the more extended we get, the more we're going to need to see a bit of a cool-off period, consolidation, maybe even a mini pullback. So keep that in the back of your mind as we are breaking out here and as the market is going absolutely bananas. And we had big tech. Let's talk about some stocks here, guys. Big tech today carried the markets. Let's be honest. It was freaking insane. Google, which you guys know I've been on record for months saying this, Google is my biggest long-term position. It's my favorite stock at this point. If I were to pick one stock, no joke, to hold for 5-10 years, if I had to be forced to pick one, it would be Google. From their, obviously, advertising business, from their obviously search engine, from their hardware products, and of course we got cloud, we got YouTube. Obviously, there's so many businesses within the business itself. I mean, this is just a beast company. And looking at the PE, which I just thought of this right now, guys, let me pull up the PE ratio. Now that it's ran up a bit in the past couple of weeks, I mean, the PE's definitely gone up. PE's 36. I mean, yes, that is maybe not the most undervalued. It's not undervalued, guys. Let's put it out there. It's not undervalued, but having a P of 36 compared to some of these other big tech names, that's a very good value in my opinion. And if this P were to somehow get to under a 30, maybe 25, close to 20 even, maybe that's a bit of a far-fetched scenario. But the lower this P gets on Google, I'm going to be adding more to my position. And full disclosure, my average on Google right now is under 2,000, that's for sure. I think it's about 1,900. I have to double check on that. But I'm loving this. I'm currently up about 30%. And I'd love to continue building this up. I'm looking at Google long-term here as a buy-the-dip type of stock. You know, if it dips every 10, 15, 20%, it drops, I'm going to be adding more to my position. So this one up 3.3% today, which for a $1 trillion plus market cap, that is unbelievable. And plus, we have Google reporting earnings on the 27th. So next week, that's probably on Monday or Tuesday or something like that. So we're going to be seeing Google's earnings. We also had Amazon absolutely crush it today. Amazon went up about 0.5%, which, I mean, I guess that's not absolutely crushing it, but they did well. And we obviously have Amazon's earnings coming up as well on the 29th, so that's next week. And we can see clearly Amazon closed under 36.70. That was a key level of resistance from back in the end of April. So if this were to break next week, this cup and handle could form. We might fill the gap up to the mid 3700s. That's very, very possible. And we also had Facebook today absolutely destroy it. Facebook had hit an all-time high at $375 and went up over 5% on the day. And like Amazon and Google, Facebook also reports earnings on the 28th. So next week, needless to say, guys, is going to be a very important week. Let's just put it that way. Very important week in the stock market. And if these companies crush earnings and if they go up in price, what's going to happen? Well, the markets are likely to go up again, higher, even higher from where we are now, because these big tech names have such a huge weighting on the overall markets. Apple went up 1.2% today. They report earnings on the 27th. So what is that? 27th's what? Today's Friday. Saturday's 24, Sunday is 25. Okay, so these companies report on Tuesday, and yeah, Tuesday is going to be a big day. Apple's breaking out very clearly. I think there's a chance it goes to 150 plus next week by the looks of it. I mean, that's where the bulls, at least from my technical viewpoint here, that's where the bulls want to take this thing. So watch out for big tech next week. Let's see what Microsoft did. Almost forgot about Microsoft, guys. Microsoft hit an all-time high today as well. It went up about 1.2%. And full disclosure, I mean, I pretty much own all of these big tech names other than Facebook. I used to own Facebook, but I sold out of that a couple months ago. So I own Google, Apple, Amazon, and Microsoft. So I own all of them, guys. I own all of them. And just because I own them doesn't mean that I believe the values they're at this moment in time are the best. In fact, I think a lot of these companies are a bit frothy, you know, when it comes to their valuation. And I own all of them at much lower prices. I think my Microsoft average is a little bit above 200. My Amazon average is like 2,600. I already mentioned Google. I'm at about, what's my Google? 1,900 on Google. Apple, my average is in the lower hundreds. So I'm in at much better prices. And for me to add more to those positions, I would need to see a substantial correction. But until then, I'm holding on and I'm just reaping the reward of holding some of the best companies in the world. And, you know, Google, again, being my favorite one out of the bunch. So let's talk about some more stocks here, guys. PayPal also went up today, 1.6%. Full disclosure, I'm long PayPal. This is one that I've owned for quite some time, and I've averaged up. You know, I started buying PayPal under $100. I think my average right now is like 150, 160 because, again, I've been averaging up on my position. And this is a debate in the stock market community, right? When you see stocks go up, a lot of people like selling. They like selling their winners. So, for example, let's say PayPal, I was buying in the hundreds, 150s. Let's say we're to run up to 200. Some people would be selling that stock in the strength, but other people, and I'm more in this category, they like rewarding their winners and adding and averaging up on great solid companies. And of course, we don't want to overpay extremely for these companies. Like right now, I'm not going to be buying more Google or Amazon or whatever, but like I said, every 10-20% of a drop, I'm going to be buying more and holding through the upswings. I'm not looking to really sell out of these because they've done so well. These are my winners. So what side are you guys on? Do you like rewarding your winners, adding more over time, averaging in on the dips, and not really selling them? Or do you like selling when they're strength and looking for other opportunities, if that makes any sense? Let me know down below in the comments. And if you guys are enjoying the video, make sure to smash that good old like button and subscribe and turn on that notification bell so you don't miss any of my content. I'm putting up a lot of videos here, as you guys know. And PayPal reports next week on the 28th, and we can see we're now at a big level of resistance at 309. We struggled there a couple days ago, more like 2 weeks ago, and back in the middle of February. So watch out for the break there on PayPal. I'm actually going to put my alert at, let's say, $309 per share. Let's put that right there, guys. And NVIDIA, we're looking at this as well very closely. And I've mentioned before in my NVIDIA video, which you guys should go check that out. I made it yesterday. Maybe I'll link it down below if I remember. NVIDIA is one that I'd love to see pull back a bit here on the yearly chart. I'd love to see it down in the mid-hundreds, let's say 140, 150. Will that happen? I think in due time it will, especially if we get a correction in the markets. I think we will get down to 150 on NVIDIA, and I will for sure be ready for that. But in the meantime, we are trading in this wedge on the 20-day chart. Lower highs, higher lows are being made. We're right around the moving averages, so we need to see what direction we pick in the very short term, right? Just because I want NVIDIA to go to 150 doesn't mean it's going to do that. The markets do the opposite of what you want them to do all the time. So if we end up breaking out of, let's say, $200 on NVIDIA, maybe we get a short-term move to the upside there where we can capitalize on maybe a day trade, a very short-term swing trade. But if we end up dumping under this wedge, under the 50 and the 180 SMA on the hourly chart, this could be moving lower. Maybe we take the lows out from a couple days ago. And in that situation, which I much rather have that occur, we could be getting closer to my $150 price target. So 2 more stocks here before I end off the video on this wonderful Friday, guys. We have number 1, Chewy. Ticker symbol CHWY. We see a clear head and shoulder, inverse head and shoulder on Chewy. We have the left shoulder, the head, the right shoulder right here. We're trading well above the moving averages, and I see a big gap coming, a gap upwards coming on Chewy here if we take out this 88 level, which has been a sticking point for a long time, needless to say. I mean, very long time. You guys can see Chewy hasn't broken out of $88 since the beginning of March, and we've tested it once, twice, 3, 4, 5, 6, 7, and now this is the 8th time we're testing it. So I believe the 8th time's the charm, guys. Screw the 3rd time the charm. 8th time's the charm on Chewy, and if this inverse head and shoulder plays out, we'll probably fill the gap to about $98. And quite honestly, this right shoulder could complete anywhere from $105 to $110, $115. So technically speaking, there's a lot more upside here, but we just need to break $88. So I'm going to put my alert there on Chewy, $88 flat. And the last one for today is Honeywell, which just reported earnings. And you guys can see on the chart here, the technicals, we're still in an upwards channel. We've been in this, in fact, for a couple months at this point, many months, almost a year. So I think Honeywell is holding the trend nicely. They went down about 1.5% today. They're down a bit more after hours, and their earnings, from a brief glance, they weren't that bad. EPS came in at $2.02 versus $1.94, so they beat EPS, and revenue came in at $8.81 billion versus $8.63 billion estimated, so double beat EPS and revenue. And despite the fact that we sold off today and we're down after hours, this is still holding the uptrend, the moving averages on the 4-hour chart, that is, and I believe maybe we could end up seeing a push back towards the mid 230s. I mean, we're seeing, again, the uptrend holding, and this kind of looks like an ascending triangle. Not really, but I'm just going to be looking to see if we get a play off the moving averages here to fill the gap back up to about 234, 235, which if we do from 226 where we are now, 227 after hours, that could be about a 3 to 4% move here on Honeywell. So that's it, guys. I'm going to end the video here. Nice, short, simple, to the point. If you guys enjoyed it, hit the like button, subscribe, drop a comment. And by the way, this is my last video here in Hawaii. The next video you see, I will be back home and we'll be back to the grind, guys. I had a great time on vacation. Thanks to everybody out there that's been dropping comments, sending me DMs about the vacation, things to do, and so forth. It was a great time, and I'm definitely ready to get back to it. So I'll catch you all in the next video. Go down below, check out my Patreon, sign up. We're going to be going hard on the Patreon this week. We took a little bit of a break on it. Still was posting, but not as frequent. And thanks to everybody out there that stuck through the Patreon the past week, 10 days. You guys are awesome. Just know we're getting back to it. So sign up if you haven't. It's linked down below, and get your $50 from M1 Finance. All you have to do is use my link, deposit $100, and we each get $50 to invest with. It's literally that simple. And again, all of those are linked down below. I'll catch you all in the next video. Thanks for tuning in again. As always, keep crushing the markets. Stay safe out there. Peace out.